All right, Flux. So how I actually traded gold. Uh, I think I've been having this analysis for a long time, so I just want to help you and also give you the exact way I actually traded. So I'm a CRT trader in that learning from our mentor, Dr. Romeo, and I think he's the founder of CRT completely, and I hope so. So how I traded gold this week. Is it this week or last week? Somehow like that. So I think first of all, you know, we have there's what we call time frame alignment, right? Align yourself with the time frame. So let's go to the chart, and you know, there's something you need to know basically about gold completely, right? There's something you need to know about gold. Actually, on my TikTok account, I actually posted the sell after price build liquidity here. Price will definitely snap down and what push high. And this is our what weekly target, right? These are our first targets, and also this is our second target. And we are now rallying down to the what uh to the all-time high probably, right? So I actually saw a turtle soup used on the daily time frame, but price didn't trigger me around this area. There was a turtle soup around this area here, but price didn't came back for me. I actually posted it on my Telegram channel. For I posted the buy limit, stop loss, and take profit. All I posted it, but price didn't came back for me. So price rally, but the first entry was nice. Also the sell entry was really nice, and also the turtle soup key level and everything was absolutely nice, following our what trading plan and also sticking to our rules. So first of all, I went down to the weekly time frame. Let me clean the chart so I can show you something. Let me adjust it because this is I want you to learn something from this. Let me draw in. Okay, so now first of all, whenever I actually went down to the weekly chart and saw something, you don't need to focus your eye on many candles. Just look at few candles. You can use few candles to spot where you're actually going to. So now, if you could look at the weekly chart, we have something here. What do you see? It's a chubby move. This is a chubby move, right? But you can still figure out where exactly you are what heading to. So now, first of all, whenever you come to a certain time frame, you need to what start with the directional bias. Where is price heading to? Where did price went to? And where exactly is it going to? Right? So second again, key level is very important. You need to understand and frame your work with this thing called key level, because without key level, I don't think price will definitely move to a certain area, or let's say, because it's you just need to know something. Either price is attacking a certain swing high or swing low, or rallying to a certain imbalance to fill it and what move high again. That's why I always say the best key level you need to focus on is what swing high, swing low, old high. We call them old high, old low, and what FVG, FVG. Sorry, FVG. You see these two key level, 1, 2, 3. They are very important. You just need to focus on this, right? And also rejection block, RGB. I call it rejection RGB. So let me show you how rejection block looks like. Okay, now this is a rejection block. It's also a key level. Those are areas where price would definitely react. It's either price violate them or what respect them. These are rejection blocks, right? Same as well. Those are also key level, right? These are rejection block. This is a rejection block. This one here is a rejection block. So those are key level. Remember, we are actually bullish, right? So price came to a certain rejection block, which is this one here, right? we got this sweep and what price delivered what to the rejection block, but didn't complete the what CRT. So whenever you are taking a trade, a certain trade, always aim for the rejection as your rejection block as your take profit. Then the second one should be your what second take profit, which is the complete low or high, either bullish or bearish. So now look at it very close. What do you see? It's a bullish trend, right? So first of all, I mark out my rejection block. Let me remove this one here. I mark out my rejection block, right? And also I got the closure of this candle. I think this the last three candle, 1, 2, 3. CRT sweep delivered. CRT. I think this is the last two candle, 1, 2, right? Okay. So now let me back test it so you guys can see it. Let me take it back. Then you guys can see what I'm talking about. Sorry. I'm so sorry. Okay. So rewind. Okay. Yeah. Okay, sorry. So okay, now look at what price did. One. Okay. We hit our rejection block, which is this high here. This is a rejection block on a weekly time frame. So on if you could check either the 4-hour or the day time frame, it represents either other block. I think that's another block, yeah. If you could switch to a lower time frame, you could see that yet it's another block. It's either other block or breaker block, but mostly other block. So now we'll mark it out. It's our key level, right? Rejection block. So now we want to see closure of what price here. This is a candle. This is a CRT candle here. 1. So now where is our target? Our target is now the CRT low, which is this one here. Either this one here, right? Okay. This is now our target. So let's see what price does. Sorry. Okay. So price decided it hit the CRT low and also came to a certain key level, right? Price came to a certain key level. So now if you could check it out, so you notice how price hits that the CRT. Price took out the previous candle high with a key level rejection block and what hits what the low. So now let's see what price did. Dump a little bit. Look at it. This is a clear sell with a key level and also a candle range high and low that was completed. So now we got a key level rejection block here, right? So now price tapped on our key level. Now we want to see the closure of this candle. So now you could notice that price closed, right? Close inside the previous candle low. Right, that is price close inside the range. This is an accumulation candle. The manipulation candle manipulated the low and closed inside the range. So now we are not expecting price to what distribute to the high. So now where is our target? This is now our target. This high. Right? This is now our target. So now let's remove this. So let's remove this. Since it's been used, the key level has been used. So now let's play and see what price did. Expand the bit, formed. Okay. So now you notice that price didn't what close outside, but it closed inside, right? Let's see. So now we now have what a second what CRT. Whenever price close inside your ongoing CRT, let's say you're on a certain trade, let's look at what price did. Close inside. Remember, we don't have any key level that will drive price down. We only have a key level that is going to drive price up, which is this one here. Let me clean this. 1, 2. So now this is our key level rejection block and also what a CRT. So now we are now targeting what this high. This is now our what strong liquidity. So now let's see what price did. And what it completed, it was what completed. Can you see? So that's how you frame your work with a certain key level, right? So you just need to understand the exact drive. Where is market driving into? You don't need to like, okay, whenever I come to the market, or whenever I come to the market, where is it heading into? Where is it going? What direction? And where is my key level? Number two. Number three, I want to see what an accumulation, manipulation, distribution on a certain key level, right? So now this is what price did. Price delivered well. So if you could check the 4-hour time, the 4-hour time will give us a very clean entry model, which I'm going to explain to you right now. So on the 4-hour time frame, if you could zoom on the 4-hour time frame, you notice the chart is a bit noisy, but you just need to what? Look at the chart very, very well. So this is our what? Current CRT. This is the current CRT we have here, which is the first CRT was here. This was it. So now if you could check, I just adjust it so you guys can see it. So this is the manipulation. This is where price manipulated, right? Manipulated. So now where is our entry model? So now if you could check it out, we have a change in state of delivery from here. We have a fair value gap, right? And also, I think the fair value gap is our key level. So whenever price comes to a certain key level, you will look for a buy. So now we got this sweep, break of structure, right? Is it break of structure or market structure? Yes, break of structure, right? Failure swing, price pusher, change the state of delivery. Where is now a key level? You notice that we have a failure swing. This is the count. This we have another block here. This is the first order block, which is this one here. This bearish candle. Price engulfed the bearish candle, right? And also price mitigated it, but price didn't take out the low. So this is a failure swing, respecting this order block. Price push higher. So now where is our next key level, which is what? This one here. This is now our next key level, right? Price tapped into it, forming a certain CRT. So in a higher time frame like this, if you want to align yourself, you need to like arrange the chart for you to understand, okay, where is price going to? Okay, this is where the second CRT formed. Now let's arrange it. Look at it. Let's arrange it a little bit so you can understand. Okay, now look at it. We got a sweep. We got a sweep, right? Let me adjust it a bit. Okay, now we got a sweep and also change in state of delivery, right? We got to change state of delivery and what? Price retrace back to a certain key level and what? Buy. So now, whenever you see a very large order block like this, let's say long order block like this, whenever the order block is very, very big, it's either we take it from the top or we use the 50%. Let's use Fibonacci. You mark it from the week to the week. This is the week from week to week. So now you notice that price has aligned itself, right? We have what? An inversion and a fair value gap that failed, inversion fair value gap, and also the 50% of what? The other block. So now let's mark it out. Inversion fair value gap. Inversion fair value gap, which is this one here, right? So sorry guys. Inversion fair value gap. Okay. Inversion fair value gap, right? And also 50%. So this is the 50%. This is the 50%. Yeah, somewhere here like this. 50%, right? So these are areas where you just need to take your entry and also what? Drive it to what? Our take profit above. So now our take profit is now here. This is the 100%. So all you need to do is what? Once you frame your entry, you what? 50% is always our what? Priority. When I say 50%, you know what I mean. Once price get to a certain level, sometimes it do reverse, but not always. So 50% is our what? Most important time and exact time to take out our trades. Let's say half of our trade, then what we break even and hold to what? 100%. Hope you understand what I mean. Whenever you enter a certain trade, whether on a weekly time frame, but mostly you can use the daily time frame and also weekly time frame to frame your buyers so that you can catch more trend. You can catch long-term trade, not just 4 hour. So that's why I always say, whenever you're a new person in this in CRT, if you're a newbie into CRT, what you need to do is what frame yourself. Okay, whenever I learn this, what time frame should I align myself? Like for me now, whenever I'm trading any pair, either gold, GBP USD, Euro USD, I normally use the daily time frame and also the weekly time frame to frame the directional bias, because whenever you are using the smaller time frame, you will keep hitting stop losses, except if you are framing yourself with a certain key level, right? You are framing yourself with a certain key level. Okay, now let's move down to the daily time frame. Let me clean this so you can understand what I'm talking about. Daily time frame, key level, CRT. Okay, let me clean this one. Let me clean it since we are done with this, right? So now let's move down to the daily time frame. Let's frame something out. So let's go down to the daily time frame. Let's frame something out. So now look at the daily time frame. You see, the daily time frame, we have a key level, which is this fair value gap, right? Price came, tapped on the key level, give us a turtle soup. Look at it. Sweep the previous candle low, right? So if you could notice it, price gave us a rejection from our key level. So then whenever price comes into a certain key level, you what? Move down to the 1 hour time frame. Where's the 1 hour? This is the 1 hour. Frame yourself. Okay, arrange the chart. Okay, now I've arranged. Okay, let me arrange the chart. So this is what? This turtle soup. TS, I'm coming. Sorry, a little bit waste of time. TS, turtle soup, right? So price gave us a turtle soup, right? Now the candle that took out the previous swing high, which is the old high. Now if you notice, price came, build a liquidity, because I saw some SMC traders which were buying from here using another block, whatever. I was just looking at them and say, oh no. Price came, fill some fair value gap, right? Fill this fair value gap, push higher. That is, price came, took out those early buyers with a key level, which is the fair value gap, right? And what? Flew higher. So now, whenever price flew high, let's say price, okay, you came dog, turtle soup, flew higher, you wait for your entry model, which is CSD. 1, 2, 3. Now, where is our model 1? Other block, look at it here, this one. So this is where I set limits for my what do you call it, my Telegram, on my Telegram channel, which I was actually targeting the high towards completely. I forgetting about this early trade that I took, and I was actually on this one here, targeting this the swing, the CRT high, which I knew it will be completed, right? So that is how I frame my work using daily, weekly, and also let me show you the 4-hour time frame. Let me give you an example of the 4-hour time frame. So now look at the 4-hour time frame. The 4-hour time frame give us something nice, to be honest. So first of all, the 4-hour time frame give us a trade which is with a key level. So we have a rejection block and also CRT. Let me mark it out for you so you can see it. Rejection block, right? Look at our CRT. 1, accumulation, manipulation, distribution. Look at it. Same, no different, right? Look at it. price hit our take profit before what spiking up, right? Same here again. Look at it. Manipulation, accumulation, manipulation, distribution. Look at the CRT here again. So they are always on the chart. Frame your work. Align yourself, right? Okay, this is the distribution phase. Yeah, TP hit. Same here again. Key level, fair value gap, accumulation, turtle soup. What? Hit, TP hit. So that's how you frame yourself. And also the entry model is on 15 minutes. The way I did on 1 hour, the daily 1 hour, weekly 4 hour, that's how you do what? Daily 1 hour, weekly 4 hour, 4 hour 15 minutes. But as a new trader in charity, don't go below daily time frame. Just stay within daily and weekly. Don't go below until you master the art. Then you what? Go on 4 hour, and mostly 4 hour time frame are mostly based on time. You just need to make sure you are on a time and also plus key level to make it stronger, right? So that is how you frame your work. And also uh you know, yeah, have a nice day, guys.